In 2021, a perfect confluence of events led to significant growth in the VCM. One of the key drivers of liquidity came from an unexpected segment, however, as KlimaDAO, a decentralized autonomous organization, launched the first tokenized cryptocurrency, Klima, which was backed by carbon credits from the Verified Carbon Standard. Klima's wild ride has been well chronicled in the media, but very few have had the opportunity to speak with the key protagonists, until now. My guest today is Giorgio Donà-Danioni, founder of KCG. Giorgio and his team played an integral role in establishing the KlimaDAO. Giorgio was candid about his journey and the lessons learned throughout this time. Join us for what was a fascinating discussion. Welcome to the Carbon Exposure Project.
Giorgio, it's a pleasure to see you again.
Thank you so much.
Oh, thank you. And thanks for your hospitality. We're in your offices here at KCG. You've got a pretty good setup here. So thank you so much for providing us your hospitality here in Dubai. I'm really excited to speak with you. We caught up in Tokyo not that long ago. I think it was only a few months ago.
2 months ago, yeah.
Yeah, and we had a really fascinating conversation. And I'm really glad that obviously, I'm here now in Dubai for the COP and get to sit down and speak with you to have you on the podcast, and for folks in the industry, in the carbon markets, that are not necessarily familiar with your story, to learn more about you and your team and your journey, which I think has delivered some incredible results. Certainly has also been disruptive, but I think there's a lot of innovation that you and your team have harnessed. So the floor is yours. I'd love to learn about you specifically and your journey, and then how you've arrived here now as KCG.
Perfect. So long story. I will try to do my best.
Please.
If there is something that I missed, or something that you think that maybe it's worth more attention,
Oh, don't worry.
just
I'll
tell
chime
me
in.
and I'll try to do my
I'll chime
best.
in.
Okay?
Don't you worry.
So first thing first, thank you so much for being here.
Oh, my pleasure. Come on, your hospitality has been fantastic.
I'm very happy that you like everything here. We're quite a small team, so everything we do it ourselves. So I think it's more important. That's my personal opinion.
Thank you, sir.
And yeah, when we meet in Tokyo, we discussed a lot about technology and innovation. And I'm very happy also to be here, so we can discuss the technology and the innovation that we did in the past, the things that we did, the things that we're doing now, and what our plan for the future.
Yeah.
I'm gonna give you a very quick introduction about myself, so you have an idea of how the past went. So I am qualified. I'm an attorney-in-law lawyer, qualified in Italy and Spain.
Mm-hmm.
And I lived most of my life in Italy, in Milan, which is the financial capital of Italy. I did part of my high school in Canada, where I learned, the English that I know now. So I always liked my job.
Milan to Calgary is a pretty big shift.
Yeah, no,
in terms of temperatures.
So I always did stuff which was more international, and I was very, very focused on technology and contract law. In 2017, when everything, there was the bubble of the tech, the new tech, the Web3 tech, I started studying the technology, and I look on what was the legal part. It was applicable to Web3 technology. So I started seeing how to apply, again, the principle that from school or from case law or from the books to the technology, and basically ask yourself, what is this in real world? And considering that there is not a specific law, because it's too early. It's
still being formulated.
Exactly. Yeah. Italy is not really a place where technology or innovation is really pursued, unfortunately. So, after 2018, I continued doing usual lawyer's job, more contract related and international related. And I started being in contact with one of my very good friends, which was Canadian, and we were he's an engineer. In 2021, he calls me and he's like, "Why don't we do something which is related to carbon markets?" And I honestly was not really aware of carbon markets, carbon credits. So I said, I started studying it. I said, that's very, very, very interesting. I also had one of my good friends at university, which I will mention after, that was doing this since long time, since the beginning. And I said, that's very, very interesting. So what can we do exactly? How can we apply the technology and I'm not going to say save the world, but make a big innovation.
Mm-hmm.
And so we got this idea mainly to put this kind of asset class on the blockchain. And when I'm saying on the blockchain, it's a little bit more complicated, but basically having a distributed ledger that allows like everybody to check and everybody like to see the number and the transaction and everything basically takes away one of the biggest problem that we see from the carbon markets, which is double counting and the origin and the history of the credit itself.
Okay, so just to contextualize, essentially the blockchain by its very nature has an immutable record.
Exactly.
So entrance into the blockchain, that block one time, and you're saying it provides that confidence in the underlying, just I guess, provenance of those instruments.
Also because like this kind of markets, like they're seen as like, I'm not going to say new, but like not everybody knows them.
No, they're in adolescence, but it's fairly new to a lot of participants.
There's also corporates and business that they don't know about this
Completely
market.
agree.
Some of them also because like they perceive it as like an asset class, which we were discussing before, right? Not as like profitable for them, or maybe because they don't know about it, they say I don't know enough, so I don't want to buy them, or maybe like because they don't trust the provenance, right? Or because they say, but you know what happens? Like I remember like one of my friends when we started this journey, he told me, but how do you know that really like this credit comes from like the real project, the real place? What happens? Like there's also like let's say a cloud, like a proper cloud, like a gray cloud, which is around
opacity. Like I call it opacity, but sure.
Opacity, yes, correct. Sorry, I'm not English.
No, that's okay.
I use Italian words.
That's okay.
English. So anyway, like it's some people like they don't know what happens, so they're not confident in the market. They don't like the market, so they're like, I'm not buying. Okay, or they just don't know this kind of asset class, right? So with this like technology, our idea was like to make the credit more, the asset class itself alone, like on the blockchain, so more transparent, eliminate the opacity, as you called it, and like giving the possibility of everyone to have access to it. Okay,
When you say everyone, you mean everyone?
Yes.
Not just restricted to institutional enterprise clients.
Yes.
But open to all investors.
Not investors, retail. Everybody who wants to use
retail.
it.
Yeah.
So let's not call them investors, because like a person that wants to just claim like a retirement for a person, maybe it doesn't have to be an investor.
You want to provide access to everyone.
Exactly, like democratizing the market, right? In a very...
No, I like that.
As we were saying before, right? Like fancy way to call like something.
Right, democratizing carbon markets. I
Exactly.
think you put the first flag in the ground.
And I'm going to give you like a quick example, because I always really like to do it in front of when we're introducing our product, our technology. I go to the people and I say, let's make a bet. In 5 minutes, you will not be able to buy a carbon offset and retire it in 5 minutes. And if you can make it, I'm going to give you a huge amount of whatever comes into my mind at that moment, $100,000. Okay. And so every time when I'm on stage and we have to, introduce the technology, I take out my phone, I show, boom, buy a carbon offset, retire it in less than 5 minutes with the certificate that we provide. So, and then, the people start saying, oh yeah, well, we're not prepared. Can you please tell us more? I said, yeah, okay, that's very easy. You need to know what is a carbon credit first. But let's say that you know this already. You need to call a broker. So first thing first, if it's Saturday, broker is not going to answer. Or if it's in a different time zone, it's not going to answer. If he doesn't know you, he's not going to answer. Maybe some Japanese brokers, they want fax. Who uses fax machines, right? There's a
lot of barriers of entry.
Exactly.
No,
so you first have the problem that you need to know who to call, the right time to call, and they have to accept your call. Right.
And you also have to have the sufficient market intelligence to understand the provenance of what you're buying.
But let's say that you have it, but you don't have like an account, right? We're going to discuss about the account.
No, sure. So it's market access is the problem.
Exactly. So again, like you need to speak with them. You need to trust them. They will have to give you like for sure like a good amount of like, we have this project, this, the price. First, you cannot check the price, at least in that call, because you need to call someone else, right? There are some tools, but they're difficult to access, right? To the retail, for instance. And again, like you say, okay, I'm just going to buy those credits. Maybe the broker doesn't want to sell you less than 1,000 credits, 10,000 credits. whatever credits, 100 credits, while maybe for you as your retail, you only want to just buy one, right? So as you see, I've given you like 10 problems, and we're still not at the moment where you're buying credits every time.
Mm-hmm.
So let's say that everything goes smoothly, you have to pay. How you're going to pay? No brokers takes credit card, right? No brokers takes any other form than just the bank wire. Bank wire takes time. In Europe, there's a system of the instant wire, but like not everyone accepts it, and it's very expensive, right? It costs $15. What if, $15 for just paying like a credit, which is, let's say, $50? It's nuts. It's 30% of it, right?
Mm-hmm.
So they have to check that the bank wire arrived, and they have to do the retirement for you. So you're never going to make it in 5 minutes, right? Even if you rush it.
The barriers of entry is significant.
And as I told you, like there's so many problems to arrive there. While with our technology, everything is literally instant, and it's automatic, and it's very, very easy. So we saw that one of the problems was like that the market was gated, literally. Like it was complicated to have access to the registries. It was super complicated to get an account on a registry. It was super complicated to have the access to the credits. It was super complicated to get the right amount, meaning like maybe a small amount, right? So going like transparency, taking away the opacity, taking away the gates from the market, or addressing this problem, we saw that the blockchain could have solved like all of those problems, right?
Mm-hmm.
So this is how it came. This is how it started. So it started as an idea. We're gonna say, yeah, this probably is gonna be something that's gonna be more like related to the people that they are really into the blockchain, right? So there you go. We started this project May.
Time frame. When was this?
Okay, so it was 2021. We were starting like to get everything together, all the idea together in March 2021. And we were like 3 companies. I would like to mention at least of Cetra, which they're here with me. And we had this idea. Everybody was like doing a part. I was, of course, doing like the legal side and the operation side. Of course, Josh was doing the tech side. Of Cetra was doing the supply side. So we got all together. We created this proof of concept, this idea.
Mm-hmm.
And in October, which was like probably the best time for the markets, all the markets.
I was going to say, there was a perfect storm of confluence. And so
stocks were nuts. We're so high.
Can I contextualize it, Georgio?
Of course.
So at the time, on the carbon side, the GEO contract had been launched. I think it was March of that year. The NGO, I think, just had launched. GEO's on futures. NGO's coming into futures in terms of an announcement. So now we've got introduction of financial intermediaries entering the carbon market. You've got liquidity in the form of stimulus from the US Fed entering the broader financial markets. You've got effectively the world starting to reopen through COVID.
Post-COVID.
You had, as a result of that, pent-up appetite with regards to people that have been taken out of their routines, let's say, working remotely, investing in meme stocks, etc., right? The GameStop phenomena. And the Web3 world was at its all-time high with regards to NFTs. And you and your team enter the carbon markets at that point in time.
Exactly.
Is that fair? Did I miss out on any
No.
Any other amazing ingredients in terms of the perfect recipe for the perfect storm?
There's so many funny anecdotes of like crazy prices NFT, but let's not go that.
No. But
sure,
there was certainly a boom at the time, I think, across all markets, and asset classes were at its apex at that time frame. So apologies for introduction there, or the context setting. Back to your story.
Yeah. Sorry, but thank you for like providing more context, which I didn't. So basically, we launched in October 2021, and like I always like to say this when I'm discussing how the story, like, because like in order to launch the protocol, I really wanted to be with Josh at the time of the launch, and so I flew all my way from Milan to Calgary, taking 3 planes in the very cold Calgary in October, as you can imagine.
Yeah.
I just show up at the door and I said, let's do the launch together, right?
Yep.
He didn't even know about it. So we went there in like this 8 square meter, 80 square feet room, and we are there with our 2 small computers, laptops, and we launch. Everything goes crazy. Like there is a huge interest. Like everybody wants the product. Everybody's interested in the carbon markets. We see a lot of retirement. We see millions of retirements, like literally millions of retirements and reissuance on chain of the of carbon credits. We see people like that. They see like price of the carbon assets, like not from the platform, but like the normal markets, like the VCM skyrocketing. Like we see like a huge interest in it.
The Geo, just again for further context, the Geo saw an 800% return on that year in 2021 from launch until the end of that year. It outperformed every other asset class in the world. So, and that's a corollary as the benchmark for carbon markets. And you guys came in right at that apex.
So, right time, right people, good idea, right protocol, because also the protocol we were coming from had like a very impactful, let's say, momentum, and everything just goes nuts in a way that like we received so much interest, and from an 8 square meter room, so crazy. Like we were really not expecting all that kind of like interest, all that kind of like, how do you say?
Just the participants. It was an incredible.
It was really incredible, and like we received like calls from brokers saying, "Oh, we want more credits. We want to bridge more. We want to know about what you're doing." We received like a lot of interest for everything we were doing. Like there was so much people that were super interested in us.
Mm-hmm.
We had like a lot of traction, and we basically, like didn't know. It was overwhelming for all of us, right?
It was overwhelming in the traditional market.
I was just about to say it.
Right. So for context, I spent my career in carbon. It was a sleepy hollow in the early mid 2000s, and then saw a potential future where we could allay some of that issues with opacity and provide greater transparency by building the infrastructure in traditional exchanges, spot, and then we curated a bridge towards futures in partnership with CME. We were doing it the traditional way, let's call it, working with institutionals, energy companies, legacy companies, commodity trading houses, enterprise clients, airlines, you name it. And at that time, the Web3, let's say, entrance into the market caught a lot of us by surprise, and especially the velocity with which you entered the market. You mentioned that it caught you guys by surprise in particular. Can you contextualize it for us and for the audience, just with some numbers in terms of the market cap of your coin and how quickly that hit some pretty interesting milestones?
It was a very funny story. I remember that like, I think that it was the 3rd day or the 4th day that we went over $1 billion. I think that it was, everything is tracked. I think it was like the 3rd day that we touched like $1.2 billion. So it was funny.
In market cap, just for the coin.
Yes, market cap,
just for
the coin.
Another interesting number that just boggles the mind. I mean, that in itself is a humongous result, but the notional value of the transactions that occurred across your ecosystem, it hit $1 billion in notional value of transactions.
Very soon. I don't know exactly, but it was
I think the numbers or the dates, the timeline was somewhere between 4 to 6 months.
No, much before.
Really?
Before. I think that it was like around 5 billions after 6 months. 5 billions, yeah. So 1 billion much before the 3-4 months. I need to double check. I honestly didn't came prepared, but like the numbers were crazy. Like we were waking up at night and like, well, what's happening here? Like, is it a dream or something? Like it was really crazy for us. And also the numbers. Like I remember like, so how's the coin going? How's the project going? How's the market cap? And it's like we take out the phone. It's like, oh, it just went over 1 billion. Like we were really not expecting that. So yeah, in terms of numbers, like. I remember that I cannot give you like exactly the month because everything went super fast, but the growth was so fast that we managed to bring on chain 25 million tons in less than 4-5 months. I remember that so we launched at the end of October. Then you know how the market is in December, right? Everybody tries to, sell in order to fix the taxes, as they say.
Well, so it's aligned with the corporate purchasing cycle of the voluntary carbon market. So Q4 has always got this bump towards the Christmas timeframe. Any companies that miss that timeframe tend to come into the market in Q1. That's been the traditional cyclicality. But that year we had the entrance of a number of new participants, not just the Web3 crowd and effectively the folks servicing your ecosystem, but we had the financial intermediaries effectively loading up on carbon. So we had everybody coming in. It was akin to a Black Friday sale, essentially. Everybody rushing the doors, and it continued throughout.
Yeah. So as I said, we started at the end of October, and we had the 25 million carbon credits brought on chain before April. So let's say November, December, January, February, March, April. So 6 months, 25 millions. But I think the biggest retirement was done in the first 2 months. I don't remember exactly the numbers, but numbers were really, really, really important. If you think about bringing all these kind of credits on chain, it's a huge number. Because there's some of our competitors that I've been discussing with them, and they say, I'm telling them, how many retirements have you done in the past 15 years? Oh, 17 millions. If you just look at the numbers, they were really, really, really impressive. It basically blew up in our mind, in our hand, right? So nobody thought that this protocol, Klima, basically KlimaDAO, could have received so much attention for everyone. It was a mix of Web3 at the top, market at the top, carbon market, interest towards carbon markets.
Net zero pledges being made at all-time high.
Absolutely.
You've got the boost of COP in Glasgow with an expectation on Article 6 that I forgot to mention. We had the Article 6 rulebook come into place, and essentially all green lights effectively for this market to take hold.
Exactly. And also people that they're in their way, they try to bring attention to the problem of climate change. And also there was the time of the DAOs, decentralized autonomous organizations. So we thought, why not applying this kind of concept to our protocol? And as I said, I've received you've heard the numbers, right? So you know how much we've grown. And so what happens is that we grew and grew and grew more until at a certain point, the economical situation of the whole world.
Well, the paradigm shifted when the war in Ukraine began,
started,
and there were a lot of then unwinding of that inertia and that flywheel. Yeah, but at the same time, so can we go back to something that you just mentioned earlier around the retirements? I think the numbers that speak for themselves.
Yes.
But by its very nature, effectively putting carbon on chain required you and your cohort effectively to make a determination to retire units, primarily VCUs, in the Vera registry, with a hash, then enabled that to go onto the chain.
This is very interesting, and I would like
that was a point of conflict, I believe, between, let's say, the traditional.
It was a
carbon
point.
market.
Let's not say of conflict, because this is our view. They had the different view. The registries had the different view. We also had the proof of concept for other registries, especially C3 also had the tokenization ready for Gold Standard, Plan Vivo, CAR, and ACR. And basically the thing that created a bit of let's say friction, as you said before, you didn't say before, but I said friction, was the fact that basically, in order to be sure that the carbon credits cannot be used, double counted, we thought that the best way would have been the cancellation from the registry and the reissuance on chain because at this with these solutions, basically, you cannot have the credits live, the credits cannot live in the real world. So you're 100% sure that nobody can spend it twice. Because if you have a credit that's, for instance, set aside, and then it's reissued on chain, then you retire it on chain, but then the credits live still, so it can be used again, you haven't solved really the problem, right?
I understand that. that is. I don't think that that's the question, but I think with
Sorry.
So just to provide the counterbalance here, the traditional market, in particular the standards, also fired back shots effectively. I think that they felt, I don't want to put words in Vero Gold Standard's mouths here, but effectively they felt under attack to a certain extent.
Which of course, nobody wanted to attack them because why?
But I think that the way that it happens in innovation is that there's a potential for disruption, and sometimes there's secondary impacts. But I think that let's say naivety of for solving the purposes of double counting, as you've correctly outlined, went against the T's and C's of the registries. Effectively, folks, let's call it from my camp of the world, the traditionalists, let's say, felt that once a credit is retired in the registry, regardless of what was put in there, whether it's a hash or a retirement reason, meant the credits had achieved the end of life.
Exactly.
Right? Because in the design, it was set up for issuance, the transaction, and ultimately retirement to substantiate a claim of neutrality. In this case, you created a bridge on chain.
Correct.
Via that retirement. That's what the pit that causes friction.
But the thing is, there was no way to delete, to remove the carbon credits and reissue it on chain. But the only instrument, it was the retirement. So what we thought, in our proof of concept, was why don't we put a hash which is unique, so that the moment that there is a hash in the registry for the retirement, it means that it's reissued on chain.
I understand that, and effectively, interestingly enough, sitting at the exchange on CBL, was seeing these transactions emerge. I saw a pretty incredible spike, as you've outlined, in terms of the liquidity quotient on the spot market, with primary and secondary market trading of instruments that then were delivered onto chain, which created essentially flags for us to investigate to see what's going on here. And folks in the traditional market were very willing to sell it into the on-chain market. I think, again, I don't want to speak necessarily for the standards and their registries, given sort of inherent conflict with my previous employer, and I'm still shareholder in Expansive and a strategic advisor, so I don't want to overstep the mark here. But I think that the centralized registry construct, right, where there's control of the issuance, the transfer, and ultimate retirement, was usurped effectively when it went on chain. The Web3 world saw it as a bridge off, like an off ramp. The traditional centralized ecosystem saw it as essentially a loss of the control, that units were now outside of their ecosystem with no ability to control, and they feared the worst. They feared that they didn't have the KYC control of admitting participants into their walled garden. You mentioned that as a rate limiting step, or like a barrier. You called it gates, which I think is really applicable. In order to transact, let's say, instruments, VRs or VCUs in the current market construct, you need to have a registry account at the registry with which to take delivery and take that custody. You created that via tokenized ecosystem through wallets and others.
Like a secondary market, if you ask me, but basically helps the primary market.
No, and I don't disagree with you with regards to that, but I think it's incumbent upon me to represent that view, right, of the traditional marketplace, and I think that that's what created the resistance then, with the announcements that Vera and Gold Standard made, that effectively came out against that tokenization unless approved, created now a very interesting time in your world. So can you take me to that moment effectively?
You also need to consider one thing, which you've seen how fast the world changes, right? You've seen how time flies. You see how technology, just think about 2022, okay? I'm talking about December 2002. Would you think about how AI would be working now?
No, there's no doubt. These paradigm shifts occur at an exponential rate.
Yeah, as you said, we were talking about the velocity of the growth, right? Same exact thing of the technology.
Yeah.
You need to use the momentum. You need to do exactly what you feel that it's necessary in order to exploit the moment.
I agree with you, Giorgio, but not to kind of push back too much. But That's the view of a technologist and a disruptor, and I get that. That's what differentiates innovators from the more conservative folks in the world. I think the legacy that I think, again, I have a responsibility to showcase is that there are people that came into this market 3 decades ago effectively building this up to where it is today. And so they saw a potential attack upon them. That was a response to them because things move so slowly for such a period of time. So it's no different to like a revolution, an industrial revolution. We have agrarian societies and all of a sudden you have industry overnight effectively. Here it just happened in an even more compressed timescale. Effectively we have centralized systems with digital assets where they're transactable between one account to another account, and then retirement, end of life cycle, very simple to understand. And here comes Web3 that just turned on this velocity. That acceleration is incredible, right? It's to a factor power of 2, right? It's just maths again, right? In terms of distance divided by speed over time, right? Multiplied by a factor of 2. Here, that acceleration occurred with regards to these markets that I don't think was unprecedented and certainly unexpected. So that's the only context that I like to bring. It's just the disruption caught everybody unaware.
Yes. What you say, it's absolutely correct, and I totally understand. Thing is, we tried to reach out to the registries, and they never answered us. They never reached us. They never speak to us. Like there was no interest in them in like finding a way that it would have gone okay for both of us, right? So just think about it. Like,
but I think also the velocity didn't work, and for both parties. I think also they were overwhelmed at the time. The number of participants that entered the market caught everybody unaware. Being at the nexus, because Expansive acquired APX at that time, and effectively was improving the infrastructure. The standard had, I can't remember the number of influx of new participants. I remember onboarding just myself, 1,500 participants over that 2-year period. It was insane. So I'm sure the invite just got lost in the mail, effectively.
For sure, that's a nice one.
But nonetheless, you reached out. I'm not making excuses.
No. What I want to tell you is, which month is and which year is December 2023. We launched October 2021. Mm-hmm. We still have no framework. We still have no answer. So I can understand the fact that you might say, well, okay, like they were overwhelmed and blah blah blah. Like it was too fast. They didn't understand maybe the technology. The thing is, we were there, ready to consult for them. They never wrote us back, and 2 years and 2 months passed, and we're still here discussing this thing. So I'm not gonna give any names, but of people that they should have done something. But the thing is, it's so clear that it was not of their interest. So I agree with you, the fact that maybe it was too fast. Yes.
But what sense? I can see.
Why after 2 years we're still here? We
Sure.
have received no context.
But there are consultations ongoing with Gold Standard and
But
the
there's
like.
nothing is happening.
No doubt. They've got a full plate. I'm not making excuses for them. I completely agree. I just think that there was this perception, and this is the purpose of inviting you on the pod and having this conversation. And thank you for your candor and openness. And again, we're having a great conversation here. But effectively, I think that many folks on the traditional side of the market perceive the Web3 incursion as an incursion. Effectively, instead of hey, here's an innovative wave that's effectively helping to scale the market, which aligns with your ambitions to democratize markets and make carbon ubiquitous, to establish it as an asset class, which I think is the commonality, right? That they perceive it as barbarians at the gate, effectively by losing control to this to
We're not
this new
barbarians
technology.
at the gate, actually.
But that's why I want to humanize this story and to showcase your intentions and that the commonality. Right, I had Mark Kember on the pod just very recently, who's the CEO of the VCMI, and he had a really interesting take that I'd love to share with you because I think it's applicable here. And he said we have VCMI, ICVCM, SBTI, and a number of other organizations, and that there's a perception that amongst them there's a huge amount of disagreement. He said no. In fact, we agree on 99% of all of the issues. Permanence, additionality, integrity, et cetera, and we disagree on certain aspects around how do we achieve the last mile effectively. Mm-hmm. And that level of discourse, that level of candor, that level of kind of sometimes disagreement is okay. And it's applicable, or I think contrastable to families. In families,
Yeah.
we all strive.
Right.
We strive
That's a nice
for the same goal, and we have effectively that same ambition, but we might disagree on the execution. And I think that that's what I want to bring back to here. That we're all part of the same family.
Exactly.
If we focus on what we have in common, which is we want to scale the market, we want to democratize this market. We want to provide access to this market with an ambition to establish carbon as an investable asset class and accessible
liquidity to the market.
Accessible to all, and then build liquidity without compromising on integrity. Because I think I want to point that out as well. I don't think that the Web3 world and Klima and now KCG, we'll come back to that kind of evolution in a sec, have any sort of role in undermining the integrity. Effectively, you're transacting already issued tons. That integrity piece lies on the side of the standards, right? And so if we all align on what we want to achieve, which is establish carbon as an asset class that scales over time. I think John Kerry yesterday came out with that comment that this is the largest market that you've heard, that no one's heard about, right? Carbon is the largest commodity or largest asset class that no one's ever heard about. If we align on that, and we disagree just on the implementation, that's okay. Those are resolvable. So with all of that being said, effectively looking at complementarity and looking at now the path forward, I think there's been a really interesting evolution. We talked about that.
Yes.
Now you and your group, your teams are effectively looking to build forward. We have right behind us KCG and Carbonmark.
As you can see, like our logo.
And I'd like for you to explain to the marketplace essentially what you're focusing on right now in order to build bridges.
Yes.
Because I think that's the fundamental difference as well. You're being constructive. You're not being destructive.
Absolutely. So I'll try to say to put it like in a very fast and quick way to people to understand. So what we want to do now, what we are doing now, is only focusing on the technology. So focusing on the technology means like concentrating of the technology that is applicable to every registry, every asset class in the VCM or to the VCM at all. Like, as you see there, Carbonmark is one of the products that comes from the development of KlimaDAO. It basically is a marketplace that runs on the blockchain, so allows all the tons that we have on chain to be brought, you can bring tons on chain, you can buy them on chain, and you can retire them on chain. And it wings both to retails and businesses and corporates. So now we will go more through like what with a fancy word we say like wallet abstraction. So basically to have a product that it's very easy to use for the businesses, for the retailers, for
the non-Web3 native
people. Because it was a bit complicated before. The 5 minutes things, of course, it is really 5 minutes, but of course you need to be
native to the Web3 world. And I think maybe I'll speak and date myself, but for the Gen Xers, it might be a little bit difficult. For the boomers, even more so, right? You're looking at millennials and Gen Z that understand Web3 natively. They've grown up in that ecosystem.
Exactly.
And maybe they take things for granted with regards to cold and hot wallets. That wallet abstraction, I really like that nomenclature. I might steal that from you for my next endeavor. But effectively, it's interesting because now you're reducing another barrier of entry.
Exactly. Yeah. So we created a barrier and we are taking them down.
Okay,
so
but that's recognition of that.
Right?
So you recognize the barriers, you call them gates in the market, you tried to disrupt.
Yes.
Okay, we saw, essentially we called it friction. That's fine. And now there's a continuous evolution and you're recognizing even further how you can reduce that friction in your own kind of ecosystem. Exactly. So that's the marketplace under Carbonmark. So talk to me about KCG.
KCG basically is like the holding that takes care of all the dealing with credits on chain. Also with with the help of Klima, which is bringing a lot of like tons on chain. Especially we're doing like a lot of projects. If you see on our forum, as we were discussing before, there is a lot of like deals that are going on, mostly like focused on innovation, because what basically Klima does now and what we want to do, of course, is innovation. We take the most innovative tons, take the most cutting edge project, take the most disruptive project, even like what we have, like for instance, now on the forum, there is an IoT, AML, AI, machine learning regarding water filtration, which is super interesting. I advise people to have a check on it. And basically what KCG does is basically trying to expand the market And as you know, you see, we're here in Dubai, right? Because we chose Abu Dhabi and Dubai as base, because like we see that this market has a lot of interest, as you see with COP, has a lot of interest in this asset class, and like with sustainability, like.
And I think that there's a demand quotient that is being unlocked as a result of COP here.
Exactly.
And I think to your point, Dubai is now regarded as an innovation hub.
Exactly.
I live in Singapore, and that's a carbon hub and an innovation hub. Dubai is no different. And in fact, as you said, they've actually got the demand quotient from the oil and gas industry in particular, being
also the industry, like
exposed.
there is aluminum industry, the heavy industry. There is the very, very big aluminum
There's a lot of
industry here.
energy being utilized here that generates CO2.
Yes,
Yeah.
exactly. So we see the potential in the GCC area. We are trying to work very close with institutions and institutional players. So far, it's going very well. You will see some announcement very soon of some also big partners from the area. So KCG is the holding that basically has all the technology and basically helps all the ecosystem to have a direction. And the direction, of course, is given by the fact that we want to grow and the innovation itself. I don't know if I put it that correctly.
No, but that's
you
great.
understand what I mean, right?
I having been through a number of rebrands and kind of evolution of the business.
It's not really a rebrand. It's more of a spin-off.
Okay, sure. But it's for us, I mean, maybe I'm projecting here, but you know, having joined a startup and then evolved through M&A and then just change in terms of our identity as we grew into it, essentially. I think it's very reflective. I was saying through this off camera, like from a branding perspective, it's very reflective of a growing up and maturation of the group itself. And so I think, I'm really excited to see that continue for you. And I think, what's great is this dialogue, I think, is necessary. This won't be the first or the last. This is the first, but it won't be the last time, essentially, that we can have this conversation. And I am looking very much forward to seeing the innovation that you and your team and the broader Web3 ecosystem brings to help to improve the carbon markets. Not necessarily viewed as disruption for disruption's sake, but a way to improve the underlying transactional ecosystem, or to help to scale the markets more broadly. Any last words?
Yeah, no, this is exactly what we want to do. We want to focus on the technology, the innovation, everything that is related to basically making this market grow and making this market like trusted and for everyone to access to it. So this is our goal. Of course, now we're more focused on, let's say, we did like two steps back. So we're more focused on Web2 and business and corporate. So this kind of like audience.
The Web2 under Carbonmark is essentially the interface that provides that wallet abstraction, correct?
Yes.
Yeah.
Yes,
which I think is necessary.
Sorry?
Which I think is necessary, right? It's effectively making it a little bit more accessible.
We want to make this super accessible to everyone and super easy for everyone.
With a view, and let me put I don't want to put words in your mouth, but effectively I will, to democratize carbon market.
Exactly.
That's the mission.
Exactly. So focusing on tech, having the best tech, having the most innovative projects, contacting like project developers. We're contacting more than 40 project developers that wants to work with us because they're interested in our technology. They see the potential. They see how they can grow the market. They see how they can pay more, even like the developers properly. So that's exactly what we want to do. Again, focusing on the GCC area, focusing on the business clients, focusing on the new innovation, focusing on the tech.
Great. I think that's fantastic. I'm really excited because effectively now we're seeing this marriage of these two worlds, the traditional, let's say, carbon world and the Web3 world, and effectively, hopefully moving forward in the positive direction. Wish you all continued success and look forward to continuing to have this conversation with you at another point in time. Maybe in Singapore next time.
Or Tokyo.
Or Tokyo. Let's go.
Yes.
Thanks, Georgio. Appreciate it.
Thank you so much.
Cheers.